afternoon, everybody. Welcome to the Trading Market Technicals Morning Call video for Friday, January 25th. We had another up day yesterday in the markets. Dow up 46, S&P up 1. However, Apple did get destroyed, and I mean literally destroyed yesterday, down 65 points. After hours broke 450 and ended up, I believe, closing in the after hours session right around the 447. Not good. It does not look pretty. I've been saying that for the last couple of months. Apple's in a clear downtrend. The stock is oversold, but can be oversold, as we all know, can be overbought and or oversold for quite some time. Apple needs a lot of work to prove itself to make its way back up, but we'll talk about that when we get to the charts. We did hit 1502 in the high in S&P cash. That's a great little great little performance in the S&P cash, but I couldn't hold on to the gains and started to roll over. We had a little bit of divergence. VIX actually picked up a little steam. I'm going to show you a neat little trick that I look at during the day, and what I like to do as far as looking for divergence as well. Anyway, our indicators are the same. They're in the stratosphere. They're extremely overbought, and there's really not much to show you, but I'm going to run through some of these indicators, but real briefly. As you can see here, we have copper. Copper is still consolidating in this daily symmetrical triangle. The weekly as well, actually getting closer into the apex and looking for the breakout. I do think the breakout's to the upside. Again, guys, longer term picture, we have constructive bullishness in the market in the longer term. Short term, we are still in an uptrend. As despite that, there's really the volume is light, we're grinding higher. There's no sellers, so the strength of the uptrend is really strong. I just can't really imagine without volume. You would figure that anything could push this market down, but there's no sellers. There's absolutely no sellers around, and we still have extreme complacency. So there's warning signals all over the place. We're just looking for one little catalyst to push this market lower, and then we could probably buy into the market for swing trades. I would not recommend adding for the longer term trader and investor that's listening to the videos. I would not recommend buying or adding to this market, even if it gets to 1520. Believe me, there's plenty of time to add into a longer term position. Not at these levels though. Real quick, you see the copper in front of you. Let's take a look at the SPX ATR. I haven't showed you this in a while. We are down in these levels, and look what happens when we get there. We get usually a sell-off, so again, using caution. And we can continue to go lower in the ATR, and the market continue to go high. But if you see here, and I'll show this to you when we get to the S&P, we create a little bit of a doji, indecision candle. We're going to need to see take out yesterday's low is going to be the really key to get some sort of a downtrend, moving some sort of acceleration, at least to the downside. Tick chart showed you yesterday, just really out of control. We did get a little bit of a pullback in the tick chart, but still really way up above here in the last year. This is the highest that it's been in quite some time that I've seen it. U.S. dollar really doing nothing, consolidating here. We do have that longer term weekly chart, that head and shoulders pattern that I wanted to show you. But it really, the only way this would be valid in this bearish configuration if it broke the trend line, which would come in around 79. Right now, it's doing absolutely nothing but consolidating. So really a break either way. We do have some area of resistance here. The 200-day moving average is right here up at the 80. So just kind of let's keep an eye on the dollar. The dollar is really going to be key here too as well. Moving on, the NYMO. Really doing nothing again, just chopping around in this range for the last month so far. So plenty of room to the upside to be overbought, and there's plenty of room to the downside before it can get oversold. And here's that chart in the S&P, as you can see here. So we're just kind of moving along. It's really surprising that the market, that the NYMO hasn't really moved into this overbought reading yet. But again, guys, since we're grinding so slow and we're grinding, there's no volatility, it's probably to be expected why the NYMO hasn't broke above 70 as of yet. Let's take a look at the yield. Now the yield, and let me get this up a little bit. Keep an eye on this 10-year, because this 10-year yield, you can look at this if you don't have the future. You can look at the TNX. We did break out of this and we bull flagged, and if you see this little area right up in here, we're actually breaking out. The 10-year started rising yesterday, 1.88%. So we're really bull flagging and breaking out of this yield. So we want to really keep an eye on this. Like again, it's probably going to be some time before we see any type of real strength out of the 10-year. But watch it, because when we start breaking higher, and even if we get a little bit of a bounce, that also could hinder on any kind of rally. So that's something that I just wanted you to keep an eye on. Lastly is the S&P above the 50-day moving average, 92% now. We're breaking way above it. Again, guys, really right to the stratosphere here. I would definitely use a word of caution with this, but again, markets can continue to be overbought. I also get a lot of people. Oh, let's. What do you think about shorting up here? Absolutely not until we start breaking some pivotal lows and we start making lower lows. So this is something that I wanted to show you. And here's the VIX. VIX and the S&P, and it's a nice little guide if you're trading during the day looking for divergence. I do an overlay of the S&P, and below that the VXX. You can use the UVXY, or if you have the future of the VIX, obviously. Ninja doesn't really provide that, the VIX, so I use the VXX, and it's a great gauge of market divergence. Actually, you can literally be a good way of picking tops and bottoms, which I don't do, but once I get confirmation. So here, this was a little bit of a lagger, and why? Because the S&P, the VIX, the VIX has been really just decimated, and it hasn't really gone anywhere. And once we saw a little bit of a sell-off, I think a lot of fear came into the markets at that time around 12 o'clock, and we started really getting the market really pulling down. Now here's a 3-minute configuration. You could do a 2 or a 5. It's really up to the trader. I'm just showing you a 3-minute. Here's that market top. We had that market top, and if you bring it right down around 11:30, the VIX started to roll right around and started picking up momentum. Here's that breakout, which really took us below the 8-period moving average. And this is something that, again, it's a great little tool for your toolbox if you're trading intraday to look for divergence. And then look at this; it took you all the way down. Actually, picked the low of the S&P, of the spiders, which is the S&P benchmark. And here you would have got your sell signal on the VIX, and up here in this candle you would have got your buy signal. So this is a great little gauge. I look at this every day, just something to look forward to. You could even do an overlay of, if you wanted to, of the 5 sectors: the Russell, the NASDAQ, the S&P, the composite, and of course the transportation sector, and then the Dow. And you can overlay them and do a 2-minute as well. But this is just really nice and simple. You just look at the VIX and what the VIX is doing inverse. It's always inversely correlated to what the S&P is doing. So this is something that I like to look at intraday. Just something that I want to bring out to you guys. Now, I just want to show you the VIX itself, the chart itself on the VIX. And yesterday I said, okay, we have a black candle. Could look like that we might get some sort of a bounce. We did get a bounce, but we just kind of sold off hard into the close as the market regained control, as you can see here. So we came right back to these levels. Okay, so, but again, this is a nice little a tool to look for divergence intraday if you're trading or if you're day trading as well. All right, so we'll get right into the charts, guys. S&P, nice big up candle, and we reversed 150.19. We're just about under 80 cents to our target of the inverted head and shoulders. Nice volume. So volume did step up. Again, MACDs are just way up there, highly elevated, as well as the really can't get any more than 100% in the stochastic. So again, no change in our indicators. They're still reading extremely overbought, and we just continue to grind higher here. And here's the S&P. And as you can see here, we put in a doji star in the S&P. 1502 was the high. Our S&P inverted head and shoulders. Our target is 1520. And this is something here that we're literally points away, and this could happen today if the market continues to grind higher. And again, guys, this is here just a word of caution. Markets do not go straight up. Eventually, they will come in. It's like the rubber band effect. If you pull the rubber band hard, the harder you pull it, the harder it's going to come in. And without any type of consolidation or pullback, this correction, that when it does happen, could be pretty nasty. So we'll take it one step at a time, but as you can see here, we're getting close to our target on the S&P. Here's a 60-minute chart. I'm looking at a 1477 yesterday. Chart's coming back into S3. I'd like to get to at least get excited about a pullback, we got to get below 1480, and that's a good 15 points away. So 1480 on the break lower and close would entice me a little bit more to get more aggressively on the short, and maybe even hold a position or two. As of right now, just total day trading and see what the markets are doing intraday before we really start putting our necks out here on counter trend. The short-term trend is up, long-term trend is up, both strong despite the fact that we're just grinding higher and consolidating sideways. There are still lots of buyers that are buying into this market, and that's what really scares me. Up into this area, buying this market without at least a pullback, there's going to be a lot of longs eventually being trapped up here. Okay, 30-minute chart of the S&P, same thing. Really no picture. Just want to show you how we just sideways consolidated, popped up, pulled back, and then just 2 days of just slowly grinding higher again. Volume did pick up yesterday, but still wasn't as great as what I'd like to see. Diamonds, Dow Jones ETF. This pretty incredible move. I mean, the Dow has been up, I think, in the last probably 10 to 12 trading days. Pretty incredible without a pullback, and continues to go higher. And it's also, you want to look at it, Dow's really the brick and mortar company. They're actually more large cap, safer brick and mortar than you look at a Russell. But nonetheless, money's flowing into the Dow, no question about it, and flowing into a lot of these key sectors that we follow. Look at the transportation sector, totally out of control, way up high here into the stratosphere again. Another big day, and this is what you want to see. I mean, you want to see, but without pullbacks, just again, I like to use a word of caution. Pullbacks here are necessary and healthy for the markets. With something like this, it's just really crazy. I would not be looking to add. If you're looking to buy transportation stocks, I'd be looking for some sort of a pullback, at least back below, at least into the 20. Now, when you see this 8-day moving average, and you're well above it, you're at 101, you're 3 points above it. This is something that you got to use caution. Now we're breaking above the Bollinger Band, which tells you that we're way overboard. So a snapback in the transportation sector is due at any given time. Here's the IWMs. We basically hit the target. So inverted head and shoulders complete, and 89.91. So we actually broke above the inverted head and shoulders target on this. So pretty nice day for the Russell. Volume coming in again, guys. As you can see here, way overbought in Nasdaq, overbought in our stochastics. So good target. We hit our first target in our inverted head and shoulders, which we had for the last 2 months in this chart. So nice job. Heads up to a lot of guys who are trading the Russell. I know a lot of people that like to trade the small caps. Okay, and let's get into Apple. All right, so we had our breakdown of our lower trend line again, as you can see here, and not good. This is a weekly chart of Apple. This is a very large engulfing candle, and this is actually a very dangerous candle. If we don't get back this candle, when we break back, we need to really take back at least 50% of it. We need to get back above this trend line of 467, so 470-ish. We need to really get back here in a rather quickly. Otherwise, this is really in bad shape, Apple. And again, as I said, I wouldn't touch this thing. We broke below the long-term trend line. I'm going to show you another one, and then here's my my little projections here. 420. There's a little at 440. Little bit if you go into the daily chart at 440. We're already at 447, and with Apple, 7 points is really nothing. I mean, it's trading 50, 60 points a day. So you could actually say that the 440 actually hit its target. 420 really is going to be the next key pivotal support, which I'm looking for. And then if that breaks, it's 352 and then 275. And if you don't think it could get there, trust me, it can. And I'm not saying that it's going to get there tomorrow, next week, but if Apple doesn't change a catalyst, some sort of fundamental, something positive, I think that Apple can really get there, and I think it's still in big trouble. As you can see, we are extremely oversold in all of our indicators, RSI, stochastic, and MACDs on the weekly chart, no less. But again, overbought and oversold is not a buy signal and or a sell signal. Remember that. Okay, let's take a look at, I got another weekly chart of Apple I'm going to show you. Here's another long-term trend line that I found. I had to go back to 2003. I just want to open this up for you guys that are trading the Apple. 2003 lows And if you come bring this all the way in, the next real support came in right here at that 4. It's right around that 440, like I mentioned here. Comes in around the 440 area. Now, where we closed, this is a closing basis, so it doesn't show you after hours. So we're right there now in the closing area. So that if that 440 breaks, then Apple's going to go much, much lower. And I'll just show you a daily chart of Apple here. We had that inverted head and shoulders, that 460 target. We hit our target. We also had some sort of a wedge forming and said, hey, you know what? The possibility, if we can hold this lower trend line, then we bounce a little bit and we break out. But that wedge did not play out. Our head and shoulders played out yet again. And mentioning the repetitive patterns, head and shoulders, we're going to a downtrend. We had another little head and shoulders, and we went into a downtrend. Now we have another head and shoulders, and hence we are going down into a downtrend. So we need to really rally today, take back a lot of this move, and I mean a lot of this move, gap included. If you looked at that weekly chart, we need to get back at least back into this area here, back into this sort of wedge here that actually formed. But anyway, heads up to the everybody who trade that head and shoulders pattern. We hit the target. And if you look at the Qs again really did. Technology was struggling yesterday, of course, partly due to Apple pulling back nicely here. I'd like to see the market in general as a whole pull back, guys. That would give us a little bit of volatility. We had a little increase in volatility intraday, and I'll tell you, it was so refreshing to see markets pulling back, volume coming in intraday, and it just gives you a little. It's just a nice little reprieve from what's been happening. Slow grind. Boring, literally just moving higher. A lot of shorts aren't working, a lot of longs aren't working, and if they are, they're gapping up and or gapping down way out of our risk parameters. So anyway, keep everything tight, keep everything in perspective. It's been a little bit longer than what I thought would be, at least having some sort of a move, but we're coming into the end of the month next week, and I do see a pickup in volatility. It just cannot end like this and continue to just grind one way. So be safe, have a great weekend, enjoy the weekend, and we'll have a full report on Monday. Take care, everybody.